Every single year, like clockwork, the US government collects billions of dollars that it was legally obligated to give back to American workers. And the craziest part? It's not because of fraud, it's not because of some complicated tax loopholes, it's simply because millions of people didn't even know they were supposed to ask for it. Welcome to this explainer, where we are going to uncover the massive amounts of unclaimed money hiding right in plain sight within the US tax code. Now, before we start our treasure hunt, I do need to point out that this explainer is strictly educational. It's not professional tax advice. Everyone's tax situation is totally different, so you should always consult a licensed CPA or tax professional before making any major tax decisions. Right, with that out of the way, let's talk about the money the government literally owes you. The sheer magnitude of this oversight is absolutely staggering. We're talking about $7 billion going right back to the Treasury every single year. Why? Because roughly 1 in 5 eligible taxpayers, which equals about 5 million people, do not claim the Earned Income Tax Credit, or EITC. They earned it, they completely qualified for it, and they just didn't know it existed. To put that astronomical number into perspective for you, for the average individual, that translates to a $3,000 mistake just sitting there totally unclaimed. And for some families with children, that missed amount can soar as high as $8,046. So today, we're going to make absolutely sure you're not one of the people leaving this money behind. Here is our roadmap for today. First, the EITC explained. Second, eligibility and limits. Third, why people miss it. Fourth, how to claim. And finally, prior years and more credits. Section 1, the EITC explained what it is and exactly how a refundable credit works. You see, the EITC is a federal tax credit created way back in 1975 to support low to moderate income workers. Now, unlike a standard tax deduction that just lowers your taxable income, a tax credit actually reduces the tax you owe, dollar for dollar. But the real superpower of the EITC is that it's fully refundable. That means even if your federal tax bill is absolutely zero, the government will still send you a check for the full credit amount. Think about it like this. If your credit is worth $3,000 and you only owe $500 in taxes, you get a $2,500 refund check put directly into your pocket. Section 2, eligibility and limits. Let's look at the exact numbers for the 2025 tax year. So the fatal mistake most people make is just assuming they don't qualify right off the bat. The very first requirement is that you must have actual earned income. This means wages, salaries, tips, and net self-employment earnings. If you work a full-time job, a part-time job, a freelance gig, or do gig economy work, that income likely qualifies. On the flip side, non-qualifying income includes things like unemployment benefits, Social Security, and investment income. It has to be money you actively earn from working. Also, you have to file a single, married filing jointly, head of household, or qualifying widow. You actually cannot claim this if you file married filing separately. Take a look at how this scales. Notice how your maximum credit and income limits are tied directly to your filing status and the number of dependents you have. For the 2025 tax year, if you have no qualifying children, the maximum credit is $649, with a single income limit hovering around $18,600. But watch what happens when we add kids to the mix. One child gets you a maximum credit of over $4,300. 2 children pushes it over $7,100. And if you have 3 or more kids, the maximum credit tops out at an amazing $8,046, with the single income limit stretching all the way up to nearly $60,000. So a single parent with 2 kids earning $40,000 a year is well within the limit and could be entitled to over $7,000 from this one credit alone. But, and this is a big but, there is a very strict cutoff you have to be aware of. You must watch out for the investment income cap. If your investment earnings for the year exceeds $12,200, you are entirely disqualified from the EITC. And that's regardless of how much or how little your actual earned income is. Section 3, why people miss it. Here are 5 reasons $7 billion is just left on the table. The IRS identified these 5 major pitfalls. Number 1, and this is by far the most common, is simply not knowing it even exists. Number 2 is falsely thinking you must owe taxes to benefit. But as we just covered, it's refundable, so you don't. Number 3, self-employed workers, freelancers, and gig drivers often assume their net earnings don't qualify. Well, they absolutely do if you file Schedule SE. Number 4 is custody confusion. And number 5 is taxpayers simply skipping the EIC section altogether when they're using simple or older paper filing methods, figuring they don't know taxes anyway. Let's actually zoom in on that fourth point about custody for a second, because it is a massive source of error. Only the custodial parent, meaning the parent who lived with the child for over half the year, can claim the EITC. This is true even if the non-custodial parent is the one who claims the child as a dependent for other tax purposes. The child must meet age, relationship, and residency requirements, generally being under 19 or under 24 if they're a full-time student.
All right, Section 4, how to claim. This is your 5-step roadmap to actually getting your refund.
You can secure your refund really smoothly just by following this strict 5-step process. First, check your eligibility online using the free IRS EITC Assistant tool. It takes like 10 minutes. Second, you must actually file Form 1040, and if you have kids, make sure you attach Schedule EIC. Third, if your income is under $73,000, use the IRS Free File program online. It's going to automatically flag these credits for you, so please don't pay a preparer for what you can get for free. Fourth, choose direct deposit to get your funds in about 21 days. And fifth, keep your documentation safe. Keep those W-2s, 1099s, and proof of residency for your kids handy, because the EITC does have a slightly higher audit rate due to all those common filing errors we talked about. Section 5, prior years and more credits. Let's talk about how to claim back pay and stack other credits. Now, what if you're watching this and realizing, wait, I definitely missed out on this in the past? Well, the good news is you legally have 3 years from the original due date of your tax return to claim a past refund you missed. That means right now you have until April 2026 to file an amended return for the 2022 tax year and until April 2027 to amend a 2023 return. You can go to irs.gov today, use the EITC Assistant for those specific prior years, and file Form 1040X if you find out you were eligible but missed it. Let's actually run the math on why this is so critical. The average EITC amount is $2,916. So if you qualified for that average credit over the last 3 tax years but never filed for it, you could potentially be sitting on an $8,748 windfall right now. Seriously, that is real money sitting in a 3-year window that permanently closes if you don't take action. And hey, while you're digging into amending those past returns, do not sleep on these other massive unclaimed credits that stack perfectly with the EITC. They could potentially save you tens of thousands of dollars. First, there's the child tax credit, which boosts up to $2,200 per child for 2026. Then, the child independent care credit, which can cover 20 to 35% of your daycare expenses, up to limits of $3,000 or $6,000. You've also got the American Opportunity Tax Credit for the first 4 years of college, which is partially refundable up to $1,000. And finally, the Savers Credit, which literally rewards you for contributing to a 401k or IRA if your income is below specific thresholds. A working parent utilizing all of these could legally access $15,000 to $20,000 in annual credits. The really crucial takeaway from all of this is that taking advantage of these tax credits isn't some shady loophole meant only for the ultra-wealthy. It is simply collecting the hard-earned money that you are legally owed. The EITC is literally one of the largest anti-poverty programs in the United States, and it's designed specifically to reward work and help working families keep more of their own money. So, check your eligibility today, amend those prior years, and stack up your credits. If this explainer helped you find some hidden financial treasure, please do me a huge favor. Hit that like button, share it with someone who might be leaving money on the table, and subscribe for more insights just like this. And I'd really love to know in the comments, did you even know the EITC existed before today? Honestly, it makes you wonder, what other massive financial secrets are hiding deep inside the thousands of pages of the US tax code? Until next time, stay focused and keep learning.